But what happened since we started 5 years ago is that we got interested in more metals, not just gold and silver. And actually, we like all of them. We do invest a lot in copper, lithium as well today. And the background to this is the periodic system. And for me, or us, it was very important to... we got these questions. I mean, you get some good returns in gold or gold equities, silver, copper. Or a lot of people said, I mean, you have heard it, that gold is like a dead stone. I don't know where stone came from, how a metal became a stone, but that's what they say. And they say dead because it doesn't yield any interest. And of course, it should not yield any interest. Because why do you get interest? Because you take a risk. And gold has no risk, no counterparty risk. So it should be yielding zero interest. But the value goes up, we know that, and that's because they print so much of the different fiat currencies. But I always got these questions about why gold? And that's why we started to really go back, why gold? And it's the unique properties of each metal. And when you look at the metals, I mean, the properties are amazing. And I think we forget to talk about what they do for our world. We even like to say that we are in a third metal age. The first metal age was like the Iron Age, Bronze Age, when we could make a knife. The second was the industrialization. Then we started to make cars, trains, aeroplanes, buildings with metals. And today, the third metal age is what we would say the electrification of the world. And we cannot live without the metals. And we have to mine them, and we have to mine them in the best possible way. So this is an amazing journey to be creating these funds, investing in the companies that we have. I will talk more about that later on. And as you see on the top, we actually have 4 different funds. I will focus a little bit on, as I said, on silver. Also because my guest speaker after here is a company focusing on silver, so I thought silver is a good name. And then we got the gift yesterday with 5% price coming up over 32. But we have 3 other funds as well. So now to the magic. I mean, if penicillin was a magical solution, that was a silver bullet. That's how you call penicillin, because it cured a lot of problems, diseases. And my question is, maybe as we talk about silver, maybe silver is the silver bullet for your portfolio, for any investor. So that's a little bit of a different take maybe. And why would that be? I will come to that. And our fund, our flagship fund, our first fund is the AUAG Silver Bullet Fund. So it comes back the silver bullet. And we like to call it Europe's riskiest fund. Somebody can challenge that. Actually, I got a little bit disappointed that our risk classification became lower because of the new rules where you have to take in consideration of the counterparty risks. And we don't have that in that way. But we have a volatility that is really high, and that makes us maybe Europe's most volatile fund. And people don't get afraid when we say that. They think it's interesting. So here is maybe the reason why to have a silver bullet fund in the portfolio, and that's the low correlation, as mentioned here before, with the broad stock market. Here it's with the Swedish stock market, but you can also have similar correlation to the European stock market or the US stock market. So it's not perfect zero, but it's really close. I like to say anything that is between plus or minus 0.3 is something good to add to the portfolio. So this is a very good portfolio tool. Coming to the fund itself, it's not, I mean, you can have much more high risk investments. And if you go for the developers or explorers, I mean, we are investing in companies that have a market cap above $200 million. So we need the big, not the big ones, they're not very big, but still big enough to trade. So what we do want is to be better than the big ETF in the market. And the US ETF is the SEAL. Probably most of you have heard about it if you're interested in silver. So that's our goal, and we don't trade in and out to do that. We are just long-only equity fund, and it has worked rather good. You see they move similar, but still we are 30% better than the ETF. So it's not so much better to buy the ETF that is a little bit cheaper, but not very much. So this is after any costs. And I think it's important to have an active fund within this sector, because when you go for, people love to invest in index, but when you do an index on a very small sector, you don't get a good fund because you get too much in one company and it may not even be a mining company. So when you go into smaller sectors like silver mining, I think it's very important to have an actively managed fund. Normally we don't show our returns, but this year is so good. Now it's already old news. But this is, well, there are only two funds on this list, but in Sweden we love funds. And this is from Avanza, where they have 1,400 different funds. And this is the number 1 and number 2 this year. So silver mining, Silver Bullet has been a good investment this year. Not every year, that won't happen. And of course we can add some more percentage from yesterday because this is already old news. But it's really hot, and I think people start to get their eyes on these investments when they see what they return and compare to the stock market. Now I'm just going to talk a little bit about silver. I can't do it too long, so I think there are two big reasons or cases for silver. And one is silver in our high-tech world. I mean, we really need silver in everything. It's said that it's the second most used commodity after oil. And now I'm not talking about the weight, but in different applications. So, and you need it. You cannot do anything. You cannot do a mobile phone. You cannot do a car. You cannot do a computer. Don't talk about solar panels and so on, but you need everything. Actually, one sad new application, or not new application, but where we need more, is actually for the bad things happening in the war with the ammunition and what they do. They also need, it's high tech, and they need a lot of silver, and that silver will be gone forever. So tragically, there will be needed even more silver. And why is silver so interesting in high tech? Well, it is the metal that has the best properties for leading electricity and heat. So I don't know if you know the list, the top 3. Silver is number 1, copper is number 2, and gold is number 3, and then you have the long list down. But sometimes you see you have gold on electrical material, not silver or copper, but you have gold outside. And there's a reason for that, because gold is not maybe leading the best, but it doesn't react with anything. I mean, silver does react with air, but gold does not. So in different applications you use gold. Mostly, of course, you use copper because it's cheaper. So silver is, you cannot do a car, as I said, without silver. You only use maybe 30 grams of silver in a car, but you need it. And this is really, really important. And in an EV, you maybe need 50, 60 grams, so you need more silver. In cameras, we need silver. But what is interesting is with the price, because it's so little, but you need it. And even if the price of silver goes up, not just 5%, because I think that's nothing. I am talking about 100%, 200%. The prices for the car will not really change because it's such a small amount. You cannot do it without it. But the price of the car will not really change. I mean, it will go, it won't cost even $1,000 more. That's it, and it already cost $50,000. So the change will not be very dramatic. And this means the car makers, when they feel that there is a shortage of silver, they will get some panic and they will try to get and buy so much they can for stock. And I think that's when the real price surge is coming, when the car producers, computer producers, or mobile phone producers have a hard time to get the silver. The price, because like oil is elastic. If it gets too expensive, we use less and the price comes down. This will not happen with silver, so almost like no end for the price of silver. And you know, we talk a lot about batteries. I'm not the expert on batteries, but like in space, they would use silver nickel batteries because they are the best batteries, but I mean they're too expensive, but they're good because you can have more energy on a smaller space, and they have no risk on taking on fire. So for space travel and so on, they would use silver nickel batteries. If you have something in the air, it's probably a silver nickel battery as well, and not a lithium battery. So silver is there, and they find new and new applications for silver. It's also going into healthcare. It has been in healthcare for a long time, but mostly a lot of health and hospitals, they use silver to kill bacteria. The second case, the second story of silver is the world of money printing. So this is really interesting. It's like the only metal that has a dual demand from investors and industry. Gold, like the industrial uses of gold is 10%. In silver it's 55% and 45% investment demand. And I mean, if you go to copper, it's 99% industrial demand. So silver has a unique position in this world. And here comes the money printing, and most of you probably know that this all started 1971. Or actually, we've been printing. The same thing happened during the Roman Empire. They started with 95% silver in the coins, and when it went under, they were below 5%. So it was their kind of inflation in the Roman Empire. But we see this again since 1971, August 15, when Nixon left, or the US left the gold standard, and the price of gold became free. And since then, if we go back to gold, all these currencies have lost approximately, or a little bit more than 99% of their value in 53 years. And well, now everybody loves silver here, but for the people who don't, the problem is these fiat currencies can lose 99% again from today. So it's not just 1% left. They can lose 99% from where they are. And the thing is, what we do see is that they are going this way. We see the US, I don't know, the debt is over 35 trillion US dollar. And the problem now in the US is, of course, that the rates have been rather high. The cost to pay this interest on their own debt is their biggest or largest expenses. It's higher than the defense expenses. So they have to lower rates. So the story about lowering rates because inflation is coming down, it's not something we believe in, but they are lowering rates because they have to. It's just getting too expensive to pay the interest on the big debt. And we also see the US, the largest economy in the world, having a deficit last fiscal year, 6%. And of course, you say you grow the economy 2-3%, but if the deficit is 6%, I mean, it's not really growth. This year, it looks to come at 8%. And that's like printing money. And now we are going to lower rates. I mean, gold has been really, I mean, silver has not been that strong, but gold has been really strong during the rate hike cycle. And of course, now when the rate cycle is going down, lowering rates, I think gold and silver will really fly, and what we are seeing is the beginning. On top of the US and the Fed lowering rates, we also got the Chinese now. Maybe not stimulus was not big enough, but it's showing what they want to do, which path they are going. They are going to print more to get themselves out of their trouble. So this will also help the price of gold and silver as monetary metals, but it will also help, of course, the metals for the industrial use, because when China pushes the pedal to the metal, so to say, that will also, of course, help the industrial demand for all metals. So little bit, just coming back to, did I do it all? No. The Silver Bullet Fund. No. It's moving there. So it's a portfolio of 25 holdings, I would say. We have some small cash management positions, but it's 25 holdings. And it's very transparent, very open. And so we have four companies with a weighting of 8%, and then we have some at 4%, some at 2%, and 1%. And I think it's just the construction that makes it better than any ETF in this market. But still, we are long only. We don't trade in and out. We don't time the market. So any investor who doesn't like it, he sells. If you want it, you buy more. So, but they know what they are buying, and that's my experience. Making a fund is it's important for the investor to know what they are buying. In a lot of funds, that's not the case. And we also have all our holdings on our webpage, so it's very open, very transparent. I think, did I jump on page or did I miss? So the fund is at $100 million US dollars, and actually have 20,000 investors in the Nordics and growing. So that's a really, really nice story, and I think we will grow it a lot just from returns and from new money coming in. And to end this a little bit, maybe have some questions after, to get it more interesting. One story in the portfolio, you saw one holding was Aya Gold and Silver, but it's only silver, no? This was an interesting story because Nisse is here too. Nisse actually helped us a little bit on this one. He connected me with Benoit, the CEO of Aya, just very fresh as a CEO at that time. And we had this meeting, and it was a great meeting, and I'm very thankful for this. And I think we were one of the first institutional investors to believe in the new management of Aya. I know some of you have bought the stock even lower. Yeah, we were happy to buy it below 150, and the stock is at 17 now. So we started at below 150, and we got this very good relation. Only problem for us as a fund is the fund is growing, we have to buy more. And that, of course, our average has been rising because we have to buy more. And then the stock has performed so well, so we had to start to sell some because the weight was going up too much. So Aya has given us some problems, but we love it. And of course, it's a really sunshine, silver story. I think that after we will have our talk here, and in between maybe we can have some questions, and I will try to answer them.
So, well, thank you for that. Extremely interesting here. And before we kick off with the panel discussion, I have my colleague at the end here with a microphone. So if you have any questions, raise your hand, and he will jump like the gazelle and give you the mic. But I will start to ask you a question here. You started in 2019, and then things have developed. And I think that you were one of the first, so you're a pioneer offering a special fund like that to the Swedish community, as it were. How would you describe the development as far as an investment case for the retailer and for the market? I expect it was an uphill struggle perhaps in the beginning, and now everybody's talking about commodities.
Well, it was a tough start, but we have been strong believers, and we were a little bit, I would say, lucky with the fact that podcasts at that time really got popular. And I happened to be on some podcasts, and I don't know why they liked what they heard, and listen to my voice. I don't know why, but because I didn't listen to podcast and I didn't believe in it, but it said boom. People got really, really interested, and as we heard this morning, I mean, Sweden is a mining country, and I think money is interesting, and for people to understand, if we go a little bit back, what is money? How does it come into the system? How is the banking system? I mean, most people, they don't get to know that the money we see on our accounts, it's not there. I mean, the banks have 10% of the money we see on our accounts. I mean, so few people know this, that the money is not there, and how the printing machine of money works. And I think this education about money, which got very interesting in 2008 in the financial crisis. What is money? And most people in the financial industry, they think they know, but they don't really know. So I think that interest, we like to share knowledge. We don't tell people really to buy. We normally never show the returns. This was an exception, but we don't put that out. We want to talk about the case, why to invest.
And obviously, the general public, which is not really here today, because there's a lot of industry specialists and people, although being retail, having an interest in that. But it's my understanding that you will see a sea change, perhaps, from retail and discussions about precious metals and commodities in that way, and there are not that many alternatives. Now you were a little bit disappointed that your risk classification went down. Could you just elaborate a little bit of that on that? That had to do with the counterparty risk.
Yeah, they since we had some crisis with junk bonds, funds with junk bonds and so on, the risk, because the risk in these funds, it looked really low, and then you got some systematic problem and suddenly they almost blow up. So they had to change the classification, not just, before they just looked at volatility. And again, volatility for me is not risk. Buying very high, very expensive, that's a risk. And volatility can be your friend. So, but that's how you classified funds before. But now they had to add something, because these high yield or junk bond funds, they looked really safe. But then something systematic happened, and then the 3 years of returns disappeared in 2 weeks. So that they had to put in this risk as well in the system, and we don't have that, as we own just equity.
Yes, so I will expose my ignorance here, but it's true that you own the real deal, so to speak. You invest in the company rather than in an ETF or any creative, let's say, product. Hence, no counterparty risk.
Yeah, exactly. We own only companies, and actually the structure of a fund is actually something really beautiful, because all parties around the fund can go bankrupt. It doesn't affect the investors' money, because we as or managers or the fund company, the structure, the custodian, which is a bank, all can go bankrupt, but the money, the equity is always safe. It cannot disappear. However, the value of the companies can go up and down, but it's like the safest construction for safety for investors. So as again, they know what they buy.
And for anyone out there wanting more information, is it just as simple as looking up your web page?
It is that simple, and to contact us. And I think we have, thanks to Christopher here and my team, we have put a lot of money. We are a small company. We don't get money from somewhere out there. But it's only our own, what we make from the management, that we put into our webpage. And we really want to have the best fund in the world and the best web page in the world. So it's we are really working hard on that. And having these, I mean, like examples, a lot of fund managers, they put up the logotypes of the company they invest in. I'm not sure they are allowed to do that. We invest in Nike or Nvidia or whatever they put up on their webpage using their logos. But we put up the holdings and the return, how much they return every day, so people can see the portfolio and how the holdings are doing during the day.
Okay, excellent. And now we'll have a seamless transformation from a presentation into a panel discussion. So Erik, if you can sit on that side, and I'll try to be in the middle. And we'll welcome Alex here. Welcome back again.
Appreciate that.
Please have a seat. And we saw that there was a history. You had a history among each other, and in a positive way, I would say. So. And we still have my colleague in the back here for a while, so if there is any questions, just raise your hand and he can walk around. My thinking here was on this panel discussion that we could just divide the mining product, as it were, into base metals, precious metals, and critical minerals, and that's so that we can get a feel from let's say the driver's outlook and any limitations. And then we have a producer here, and then we have the investor here, and then we have you. So let's see where that will bring us. But if we look at the base metals, and Erik, you gave us a pretty good feel for, let's say, in the industrial use versus the investment use on gold, silver and copper in that respect. But we do have other metals that are important. Do you have any interest in those, and do you see any development there? I mean, with the let's say demand for iron ore or whatever, would that go up, and with that coke or anything else?
Yes, I mean, in one of our funds, Essential Metals, we like to have all metals as broad as possible. I would say that the maybe most interesting of these, not being gold and silver, is for us it's copper for the electrification as a more safe bet than, I mean, lithium we have seen with the batteries, it goes up and down and down and up, but copper you need, and for the US to make all the grid updating, I mean, and the AI centers, you will need an enormous amount of copper, and you don't have no new findings, so copper is really hot. And I think also uranium is really interesting. I mean, it has gone up and gone down a bit, but I think that's, I mean, we see all the companies, AI companies, they want to have their own power plants even. So I mean, I think uranium is an interesting one.
And if I then turn to the industry, it's easy for you. Well, easy, but it's easy for you to invest in those metals because you could buy the company and then you could sell it. But if you're in the industry, I mean, the lead time from when you decide to drill and get the product up is a couple of years, 5 years perhaps. And before that, you have to do the feasibility study and so on. And as I mentioned with Aya, and forgive me here, but I mentioned almost every metal on the face of the earth that you do have some interest in Morocco. So how do you decide? Let's go for copper. Let's go for gold. Let's go for.
Well, first off, we are who we are because of guys like Erik. So Erik has been a huge component to our success. We spend a lot of time meeting investors like Erik, but it's risk capital, number one. So when we look at our opportunity in front of us, silver is what we do. We're pure silver for the next 5 years at least, and our success is basically pulling ounces forward, pulling production forward. We have a window here that's very short, and right now we're $32 silver, whatever the price is. Erik recognizes that, but he invests in the company because of the ability to pull everything forward. And so, while the other component that the box that everybody checks is jurisdiction. Morocco is actually a copper belt, and so our challenge will be over the next 5 years is balancing other critical metals like copper and silver, and we have an abundance of silver. But how do we deal with the copper exposure over time? We'll be creative with that, but it's a huge component. But silver is where it's at. I mean, the reality is, you saw Samsung create a special battery. Silver is a big component of that, and so, you know, our traders. We talked about the banks being short capital. They have 10% of their capital on balance sheets. Silver is, you know, the ETFs don't hold silver. that's another discussion altogether. I want to get into conspiracy theories, but we're short silver. We produce roughly, not us, but the world produces about a billion ounces of silver a year, just over that, 1.2 billion. Some of it's scrap, but there's no pure silver producers out there. It's a byproduct. And with jurisdictions increasingly getting more and more challenging. So as silver goes up, you see what happened with oil. It got more challenging as countries decided to take back assets and all this other stuff. Anyway, to go back to the original question, we're silver for the time being, but it's a copper belt. We do value copper. It's going to be a component at some point. And with our second project, Boumadine, it's a polymetallic structure. So in that structure, we have gold, silver, lead, zinc. 75% of it is precious metals, though, and that's going to be our focus for the time being.
And obviously because of the lead time, so if you can produce silver, then obviously you will produce silver, and then you take it, as it were. You mentioned jurisdiction, so I'll turn to you then, Eric. When you look at all the investments and how important would the jurisdiction be? Obviously, it's important, but as we can see with Sweden and uranium, all of a sudden Sweden seemed to be quite interesting for uranium exploration, but 5 years ago it wasn't. So that's also a long lead time. How do you view that? How do you manage the risk there?
I would like to say that we have 4 really important points to go for a company, and the first is, if we want a silver company, how much silver do they mine, the percentage. That's important. Secondly is we need, as our funds are growing and we are prepared to grow, we need liquid stocks. So we need a $200 million market cap, and we want to see them on a large exchange. And I'm trying to push Aya to go to the US exchange. They are on the TSX, but the US is more liquid. Maybe then we can have a higher percent allocation to Aya.
We're working on it. We're working on it.
So that's important to get. It costs money to be on the big exchanges, but I think it's very important for funds like us to be able to buy, because we have to be able to sell. We have redemptions or subscriptions every day, so we have to meet that. So liquidity in the stock. The third thing that I want to answer your question is the jurisdiction, and the fourth is the management. These are the 4 really important things for us. But coming back to jurisdiction, we have a very important, I make it easy, but for us, when we started 2019, we said we want to avoid difficult countries in Africa. Okay. And this is a difference between a fund or like we have the famous Lundin family from Sweden, and they are very good at difficult countries. That is their expertise, but they are a family. We are a fund. We have to take this binary risk in a big consideration, because it's hard to explain that we lost everything because of something happened. Why did you invest in this and this country? So we excluded difficult countries in Africa. We excluded Chinese companies. That means mining in China and Chinese management, because we cannot trust their books maybe. And we decided 2019 not to invest in Russian companies, because we thought it's maybe a one-man state. So that was the reason. And we never got out and said we were good, that we did that before the war. But we heard a lot of fund managers, they said they were so good because they sold all the Russian holdings. But they had no process before. And our decision before could have been, we could have said, yes, we will buy Russian miners. But then the important thing is that we had the process to decide, should we do this or that? And actually, more to this question is, since then, 2019, jurisdiction has been becoming even more important. More things are happening, more protectionist, the deglobalization. So jurisdiction is really, really interesting, and we like Morocco jurisdiction. It's not perfect, because it's still, you have a binary risk, with the king deciding everything, even if it looks really good. So we look at that, but it's still it's a good country and stable country, and that's very, very important. And Sweden, as you said, I think Sweden is a good country for mine. I mean, you know the rules. It's rather simple, not complicated, straightforward. But we have been bad and slow on promoting mining. And as we heard this morning, Europe has to mine more of what we consume. And I think it would be good for the world also, because I think Europe can do it in a good way.
That is a segue into next question. It would be that there may be a sea change in the opinions, because it has been a little bit of a luxury belief that we can electrify the world, but we don't really need the batteries in a way, because we don't want to dig for that. So that's an interesting thing. If we look at, we just hang on a little bit on the jurisdictions, and I touched upon that on Morocco here. Obviously, you are there where you are, but would you dare to elaborate a little bit about the future going on? Because Morocco seemed to be a little bit forgotten, and I think you've pictured it quite well when you say the Middle East, the Switzerland of the Middle East. What can we expect going forward in the jurisdiction here?
Well, our meetings are jam-packed. We spend a lot of time talking to people, corporates included, on the merits of being in Morocco. Benoit, who's not here, unfortunately, but he was the number 3 permit of Burkina Faso 20, 30 years ago. And if you'd held that stock through now, you know, it was ultimately sold to Endeavour, you would have made a lot of money. Right now, we're in the first inning. And so let's have this discussion in a year, 2 years. I think we'll have pulled a lot of stuff forward, including we're spending a lot of time consolidating as much real estate as we can in Morocco. That's the play. I mean, we touched upon this morning. Imagine being on Fifth Avenue and setting up Saks Fifth Avenue, and there's not a store on the street. That's what we have. And so I don't see anything changing for this foreseeable future. They're very commercial. You're going to see the big guys, I think, over the course of the next 1 year to 2 years, come back into the country. Why? Because it's a copper belt. Now, silver is a very specific metal. It's a very niche metal. It's not going to attract the Barricks of the world. It's not going to attract the Newmonts of the world or the Kinrosses. It's you know, when you talk to a gold company, they reference copper and gold for the most part, by and large. So as soon as we start growing the footprint, you're going to see a lot of interest come back to Morocco. They want to see results. It's going to come. I'm convinced of it. We're seeing it in our meetings. We're seeing it in our discussions. And you're seeing it in our valuation. So, you know, people, we had an all-time high yesterday. I don't think that's going to change. And I actually put my money where my mouth is. For those who don't know, I bought $500,000 of stock in the market in July. And that's very rare for a mining company to do that. And I did that because I can't find anything else out there. There's a lot of juniors with amazing projects in Mexico, in Argentina. I like Argentina. It's not investable for us.
Okay.
So as a company, we consolidate Morocco, and then we're going to go from there. And that's probably 5 to 6 years of running room. So, you know, we're working hard to find other assets in Morocco. They're there. You know, we're going to be doing stuff in the near future that will become more clear. But yeah, you know what? As much as I love some of the stuff elsewhere, it's just not feasible. The last thing I'd say is that when you talk to a big fund like Fidelity or T. Rowe, who's an investor, they tell us, let us do the jurisdictional picking. You focus on Morocco. We own you because of Morocco management and because of precious metal exposure. And by the way, if you do get base metals, great. That's a bonus. So that's we're not going to deviate from that.
No. And if I turn to you and we hang around a little bit on the precious metals, we have been talking about silver here, but so it's about 50-50 investment, industrial and investment on silver. And I will expose my ignorance here, but there are some people over the time that have argued for silver being the cheap man's gold. Has that already happened, or is that out there as some sort of booster for the demand, and that will be, you know, connected to inflations and money printing situation? You would like to have gold to hedge yourself, but you will go for silver because it's, well, cheaper, you know, in a way.
Well, first of all, I mean, a lot of people, I think gold will go much higher, but I already see people say, "Oh, it has gone up so much, I don't dare to buy anymore." And I think silver and mining companies is like a second chance. If you didn't buy on the gold run, you have a second chance now to buy before the silver and the mining companies are really flying and taking off. Because one big thing here, what is happening is the miners did not go up with the gold price because the costs went up. But now the gold price is stable and going higher and higher. And the change of margin, the margin expansion from now or from 6 months, that will be shown in the results, it will be enormous. And then the equity prices will really, really fly. So the margin expansion coming that will be shown in the results will be a big thing. And I think it's important to buy before that happens. Or
You're seeing that now, the consolidation in the past 3 months, it's off the charts. You're seeing it, like the liquidity into the system, it's all very healthy what's happening. You're seeing new levels in gold. I thought 2,300 was the new level a few months ago. It held it, and it's gone to the moon. And you're seeing it with stocks. You're seeing it with silver. We sold a bunch of silver yesterday at $32. We can sell it through our phones. We sell our silver. That's how efficient the market is. But the consolidation's a major thematic that, and I think Osisko's in the audience, but they were, they sold their company. They were the first ones to do that, and it's kicking off a huge theme that's very constructive for investors in this room because liquidity is gonna help.
And I also think, I mean, we spoke about silver here. I mean, the natural gold-silver ratio in nature is 16:1, as Newton set the price 16:1. And if I'm correct, the mining number is 10:1, 8:1, what I hear. So that's, and now we have been around 80, 90:1 and coming down, and I think we will come maybe down to 70:1 this year, on the way at least to 30:1, as normally with the precious metal bull market, you go normally down at least to 30:1. I think this time we can go lower to 15, even to 10:1. I mean, silver has an amazing run to go.
So was that the ratio for the producers? There's a ratio between for the consumer
The gold price
versus
silver.
silver, and it has been narrowing for the producers.
No, not the price. The price of the commodity.
Yeah.
If you just divide that.
Okay.
I mean,
So something's got to give there, in a way.
Well, normally in a bull market, I mean, silver is catching up the price, and then the ratio goes down. But there's still a lot of room for silver to catch up. And when we get, I mean, if we get gold to 3,000 and a gold to silver ratio at 30, I mean, we have a triple-digit silver price, 100. So
that's realistic. I think that's what's happening.
So things are looking good for.
But I say that, but man plans and God laughs. So
Yes, that's fine. That's fine. But I mean, an outlook and an expectation is an outlook and an expectation. So we have discussed the underlying product and the pricing of that, and there will be a lot of factors coming into to the demand here. But if we look at the cost side, so we went through a pandemic. Obviously, demands dried up, but then again, any deliverance of any equipment dried up as well, and there might be some sort of shortness of workforce and so on. So, I mean, you can. There's forward and there's one step backward as well. How do you view your situation? You didn't seem to be worried when you had your company presentation.
Listen, we're blessed. I can't speak for others, but our costs are, generally speaking, a third of the cost of anywhere else on the planet. So whether it's labor, and it's technically efficient labor, very smart people in Morocco. It's logistics, steel, all that stuff we source from Spain, China. It's hard for North Americans to compete with that. I mean, you're very lucky to be on this side of the world for many reasons. Inflation on that side of the pond is very different. You're seeing drilling costs at $400 to $500 a meter. For us, it's $150 to $175 a meter. Same thing with the cost of building. So we have an abundance of resources available to us, no delays. We are 75% of drilling in Morocco, so that in itself is a challenge because we have to bring drillers now. We're starting to mobilize and bring drillers from elsewhere. So, but that's changing. That's changing. I think Africa and North Africa was forgotten, and I can't speak for Europe, but over the last 5 to 6 years, it's back in play. It's for sure back in play because of many reasons we discussed, including jurisdictional risk. Mexico, Argentina. Argentina is getting better. It's much better than it was, but there's flare-ups everywhere. Even Canada. I was told by an investor out of Australia recently, it's uninvestable.
Okay. And if we turn then to the investor here, obviously, if inflation goes up, then the underlying product should increase in value. But if you look at your specific companies, then there may be shortage in drilling or increased price hikes and so on. You mentioned your 4 criterias, and surely, well, cost inflation must be there somewhere. But what's your outlook?
Well, first of all, I would say costs went up, but they stabilized. And now, after stabilizing, we have seen energy prices coming down and the commodity price of gold and silver going up. So it's like a perfect storm for this. Secondly, that's another bad one with Aya. I had two already, and we love Aya. That's the thing is with a low-cost producer, because there are 2 truths on this. So it's much safer to have a low-cost producer to own it. But actually for returns, you can actually, as an investor, get more returns on a company with high costs. Because if the commodity itself goes up, the leverage is higher on the high-cost producer, but you take a higher risk.
Okay.
So it's a two-edged sword. So, but it's not a bad problem with Aya.
No, it's exactly right. You're seeing the pigs. They say the pigs fly in this market. So it's true. The high-cost producers are doing extremely well, but it's interesting because he's right. The inflation is coming down, pressures, and you're seeing margin expansion, which has never been seen in our business in the last 10 years.
So
maybe I would like to add one thing. What is happening too is, it's a pity maybe for many companies here, but it's the big ones. They are not going for exploration, buying the explorers. They are buying already producing mid-caps to grow their business. Maybe not the smartest in the long run, but for the short term, it's good for them, and they make some more, putting these companies together. But when they buy an already producing company, it won't give us more gold, silver, or copper to the market.
Okay, no, that's true.
Like 2011,
That's right.
they were going for explorers, or they did it themselves, put a lot of money into it, and we got more gold, silver, and copper to the market. It's not happening now. So I think there will be some lag for the small companies to really get the big returns on the stock prices. But when it happens, it will be dramatic. But it's a little bit different than 2011.
That's right.
But so it seems like we could have a perfect storm, but reverse to that, because the inflation will come down. We have a growing demand, and I cannot emphasize what you have pointed for here on the money printing side, but that surely must put a focus on the precious metals. And then you have an industrial boom, which could be a very interesting outlook for, let's say, the sector and anyone who is investing in them, in those. And I appreciate your point here on the juniors and the developers that will bring on more supply to the market, because that will probably be that will lower the risk premium in a way when people get that into their heads. That's how I interpret you there.
I just said it would take more time before the money flows into these companies, and I mean they really need it and want it. So it will take time, but when it happens, it will be dramatic. But at the moment,
It's interesting you say that, because what's happening, and I just saw we just did it. We were spinning out an asset, as you know, because we have so much on our plate, and the demand for that spin out. And I think it's a function of people like Eric and M&A that's happening. We're 6 or 7 times covered on the base deal, meaning if we have a deal for $10 million, there's 60 million of demand.
Okay.
And so so we're starting to see. I mean, we're the exception. We're very lucky, but there's pockets of capital coming in to finance these new discoveries that hopefully will happen. Because you're right, when M&A happens, they're buying a developer, and there's not new metal coming, a new discovery being found. It's old metal.
Cool. Do we have any questions here from the floor? And obviously at this time, well, if you can just lift your hand there, and we'll take it from there. There. Yep. So you get a microphone so everyone can hear. Thank you.
I think we have two important questions for people, especially here in Sweden and also in the States. That is the political stability in Morocco for the coming years. And the second one for Erik, what do you think about the supply and demand situation in silver in 2 years' time? That's also an important question.
Shall we start with Morocco and then?
Sure. So we're very busy in Morocco from the standpoint of being secure. First of all, it's a secure country. It's a police state. What we're seeing is, for example, we're going to Saudi Arabia to go meet with delegations there. There is an abundance of capital flowing into the country. Like when I say China, Saudi Arabia, U.S. capital, hard capital going into that country now, it's happening in front of us. That's a positive thing. You can't have a government that takes a step back at this point. It's just going to derail everything. They have a very active battery OEM ambition to be one of the biggest battery makers on the planet. So that's also happening. Now, from our perspective, we have a guy named Mustafa Louafi, who's our number 2 within the company. He was also the number 2 at OCP, the largest phosphate producer in Morocco. He's on the mining committee for Morocco. That's with ONIM. He's talking to the highest players within Morocco every day. Some people will say, and I'll just joke around here, oh, I talk to the king all the time. Doesn't happen. That just doesn't happen. There's people around the king who make decisions. The king's a very smart guy. He has a very smart group around him that make long-term decisions. I'm talking about 30, 40, 50 years. This is not a banana republic. Of course it could change, but we don't see that at all. They see themselves as South Korea. I think I've brought that up before. South Korea is one of the most advanced countries in the world, and they want to embrace that same hyperspeed of getting there. They're building bullet trains everywhere. So they have no desire to derail that. And like I said, it's a very forward-thinking king. He believes in renewable energy. He believes in agriculture. It's funny. I mean, he's investing in base metals. Doesn't really like precious metals, so he's giving them up in the country. He's going outside because he finds that for whatever reason, copper is more of a critical metal, and that's fine. That's great. But they're very, very active in helping investment come into the country. I don't see that changing at all. And like I said, we're set up with a bunch of I think we're only like 5% expats in the company. It's all Moroccan. We are a Moroccan company. So hopefully that helps.
And then you?
Well, first of all, I would like to say that it's a very good question, and we have been talking about the physical shortage of silver. When will it happen? And I think what is important is to see on the industrial 1,000 ounces bars. That's where you will see when the panic starts, because when the prices go up when the retail demand of coins, I mean, they put a premium and they push the price down a little bit. So it's when the industrial demand really feels that there is a shortage, then it really fly. And we think that's really, really close. And also we think that this physical shortage will really crush what's happening on the COMEX, the US Commodity Exchange, because that has been a problem for the silver market. As the big banks, I mean, the COMEX was made for producers and farmers to hedge their future production, to have a safety to get the loans from the bank and so on, but they don't do it. Since the big ones did it in 2000, 2001, nobody is hedging if not the bank tells them to hedge, they don't hedge. So actually, it's only commercial banks playing the game on the COMEX, in and out, going short and so on. And this has been a problem for the price and making a lot of distortion. And that's another problem. Actually, a problem that I took up on another conference is that mining companies are unfortunately only price takers. They are not price makers. Like Apple, they are price makers on their iPhones. But the miners, they're price takers. And that would be a good change if they could start to, this is the price. You won't get it if you don't pay this price. So the shortage is coming. When it's really, really hard to say. And what is also interesting is it's inelastic in the regard there are so few primary silver miners. So there are so few miners. If the silver prices goes much more than gold, copper, and other metals, there are very few miners that would just start to try to mine more just to get more silver because it's just a byproduct. Mm-hmm. So these few primary silver miners have a very, very special situation when the silver prices goes up much more than other metals. So it's very, very interesting because it's inelastic on both sides. You need it on that side, and there are very few primary silver miners so that can really try to raise their production to meet the demand.
Excellent. Well, thank you, gentlemen. Silver, silver, and silver. That's the conclusion. Thank you.
Thank you so much.
Thank you.
Thank you. Thank you.
And now it's high time to welcome the next company. So that will be the company presentations, as we are aware. And that will be Military Mining. So we should have, is it Jeremy Ross or Scott Eldridge? That's cool. I can have it here. So sorry. Right. So
Is my mic?
it should be. You can test.